All right, Ken Ranch Theory Trader back with another video on the top reasons to trade the weekly CRT. So, number one, higher time frame does equal cleaner market structure. You have to remember that on the weekly chart, the lines are very clearly defined. When you can spot a good candle 2 on the weekly chart, all you're expecting from then on out from the next week is straight rise price action with some, of course, retracements here and there. But it's not just a random move. See, everything has already been engineered. And if you know anything about CRT, candle 3 is all about reaction, distribution, expansion, however you want to put it. So there's going to be fewer fake outs when you're right and definitely more intention. Number two, you have the stronger probability of follow through because you have to remember that CRT is built across multiple candles and multiple sessions with candle 1, 2, and 3. So on the weekly time frame, when price delivers or expands in the direction that you want it to go, it can move hundreds of pips, not just tiny little 50 pips here, 20 pips here, 30 pips here. Okay. So you are aligning with a big move, not just a small little, tick on the screen. Okay. Weekly. Okay. Number three, you're going to be exposed to better risk reward opportunities. So because weekly ranges are larger, you can get wider stops, okay? But at the same time, you can also have much larger targets. So even if your position size is smaller, your risk reward can be significantly higher because if you get in early enough on candle 3, which I recommend be around the weekly open or so, you can get hundreds of pips. So one good weekly trade, just one, can outperform dozens of lower time frame trades. So imagine, if you're trading, let's say the 4 hour, you may get 40 pips here, lose 20, make 30, make 50, lose 30. But if you can get one good weekly candle 3, you can have 200 pip profit, okay, in one trade. That's powerful. Okay, that's powerful. And if you scale into it, oh my gosh. Now, this can also reduce over trading because when you're operating on the weekly bias, you can naturally just sit out all the noise, ignore all the little false pullbacks, etc., plan it out on the weekend, set your alerts, be smart about it, and that's going to automatically give you peace of mind. Because when you're trading lower time frames, you can be subject to more over trading. I'm going to be honest. I'm not exempt from that either. But when you start trading higher ones, I mean, you just automatically know what you look for. You set your levels and you're done, right? So that in and of itself is half the battle. And as well, from then on out, once you take your entry, then it's just a matter of playing the waiting game. So if you can be patient and just wait for the setup to play out, then you'll definitely be able to see more of an increase in your account balance. Also, you're going to have clear bias and opportunities for lower time frame trading. So remember that when you trade the weekly candle range theory, you open yourself up for the possibility to take lower CRT setups with time frame alignment on the 8-hour, daily, or 4-hour time frames. So if you're expecting a candle 3 long, then you can also, when you drop down to, say, the daily chart, you can see a Monday, Tuesday, Wednesday candle 3 inside of the weekly candle 3. So it's fractal, right? Or if you're looking for a 4-hour candle 3 inside of a weekly candle 3. And if you're right, I promise you will see them. Okay. So I appreciate you watching this. I know it's a short video, but the main thing I want you to do is check the links in the description and you're going to see where I explain in detail a deep study of how you want to trade the weekly chart and how you can take the fractal aspect of it and look for CRT setups on the lower time frames after you get your bias from looking at weekly candle 2s and expecting a candle 3 on the next week. So appreciate you watching. Thanks for your time and attention and have a great rest of your day. Take care.